Bob Murphy, welcome to the show. Really glad you could make it.
Thanks for having me. Glad to be here.
So I actually was inspired by your Twitter feed, and I was going back through today, and I was trying to figure out what was the one because I don't even think I had been following you on Twitter. I mean, I've had your Great Depression New Deal book for years now. I don't even know how long I've had that thing, and but I found you on Twitter recently, and I thought, hey, we need to get this guy on there, and um, I noticed that you are now with a company called Infineo. Is that correct? Is that how you say that?
Yep.
Okay,
Yep. Infineo.
Infineo. So maybe before we get to your roots as an economist and a passionate advocate of free markets, to say the least, um, I just want to find out what you're doing at Infineo these days and sort of get myself as well as our listeners up to date on your what you're doing.
Okay, sure thing. Thanks. Yeah. And again, thanks for having me, guys. Yeah, so I'm the chief economist at Infineo. We are a tech company in the financial sector. And what we're doing right now is taking life insurance and tokenizing it, putting it on the blockchain. So we're opening up life insurance as an asset class to investors around the world. So that's the quick version of what we're doing.
Yes, I went and I tried to learn about this, but I have to say, like, tokenizing, as soon as someone starts talking about tokenizing, I don't quite yet completely get it. I must admit. I hate to because I'm afraid it makes me look kind of dumb, but I don't know. I'm 60 plus. Maybe I can get away with it. Uh, what does it mean to tokenize life insurance as and then that makes it into an investment? I don't understand.
Okay, sure. So, I mean, I'm sure your listeners are familiar with Bitcoin, and so there, one way of thinking of what that is, it's like a digital token, but it's kind of an abstract thing. It doesn't point to something else. It's its own thing. It's not a representative. So, once that was established, and ultimately, like the technology was blockchain technology, like, oh, there's these public ledgers. There's no one entity that's quote in charge of Bitcoin. It's these public ledgers. Anybody can download the protocol, and there's rules about how somebody can send Bitcoins from one address to another, and it's all decentralized and so forth, peer to peer. So then that basic technology, people then realized, oh, okay, you can apply that elsewhere. And so what if we sort of have a hybrid between our conventional analog system right now of property titles and, oh, you got a piece of real estate there and there's a deed and you go down to the county clerk if you want to buy it and that sort of thing, with this blockchain technology. And so what it means to tokenize something, and it's called RWA, or real world assets. That's kind of the general space of this, that what we're focusing on is life insurance. We're the first company to do that in this space, is to say, okay, you're using a blockchain. So it's not Bitcoin. It's a different blockchain typically. And there's tokens that you're moving around through the same basic procedure as how you do it with Bitcoin, except what the token means in this context is it's saying this person who has this, the legal system recognizes, and the regulatory framework, the SEC, if you're in the US and everything, recognizes that this is legally equivalent to saying you have, a fractional share in whatever this underlying asset is. So that's what the token is doing. So by saying we're tokenizing life insurance, we acquire, legally speaking, life insurance policies in the secondary market. We put them into a special purpose vehicle, and then we issue tokens. And again, this is all, like, other companies have done this for different types of assets. So this isn't anything novel.
Hmm.
And then people can move those tokens around if they have like a wallet that has Bitcoin and Ethereum, and you can have these types of tokens in them. But what it means is, oh, it's pointing to real world life insurance policies.
I see. I see. So the token is just a digital representation of your ownership of whatever it is.
Right. And so, and say, well, what's the point of doing that? Well, there's lots of convenience and other reasons in terms of like the economics underlying it, that if you want to get into that, I would be happy to do so. But yeah, that's the basic thing. That's what it means to say that in this context.
Right. And so once I buy a life insurance token, um, I have invested in this life insurance policy. How does my return come to me?
Okay,
In what
sure. So
form?
the
So
specific, right. So uh, I should be more specific here. So let's just take we're calling it the sound token.
Mm-hmm.
So what that is, it's a fractional claim on a pool on the aggregate cash surrender value of a pool of whole life insurance policies.
Mm-hmm.
So that's what its claim is. So we have a whole pool of policies, each one of which at any given time has what's called a cash surrender value. So that's saying you could turn that back into the carrier and get a spot payment. It's lower than the face death benefit. It's sort of like, in anticipation of that future death benefit that would occur at some unknown time.
Mm-hmm.
So it's how much the carrier pays you to walk away from a policy. And so that's the underlying value of these things. Like, it's a floor. They can't go lower than that because you could just always turn it back into the carrier. So you add all that up. If we've got 50, 100, whatever it is, policies in the pool, and then the tokens are fractional claims on that aggregate cash surrender value. So every year, as we make the premium payments, if needed contractually, the cash surrender value of each policy in the pool goes up. And so the aggregate of those all goes up. And then you, as the fractional owner, you're seeing that implicit rate of return in terms of the NAV on your token.
I
So
see.
one way of putting it is we would buy it back from you. Like, we have a standing pledge that, we would buy it back from you at, as that NAV marches up. So you'd get that, but also you can borrow against it. That's the other nice feature of this. So what, in case your audience isn't familiar, or some of them aren't familiar, this has been a standard thing. Like, there's a certain niche community in the life insurance sector of, agents telling, especially like medium-sized business owners who have a lot of cash flow, that if you have one or more of these well-capitalized whole life policies, forget the blockchain stuff, just doing it, in the analog way,
Mm-hmm.
it's a great way to manage cash flows. There's tax advantages and stuff like that too. So we're just making it easier to get into that, without, having to take out a life insurance policy from scratch and improving insurable interest and, peeing in a cup and so forth. Right. This is just an easier way. If you like the if you like the economics of it, to just hop right in. One other advantage is, if you were to do it the old fashioned way and just take out actual policies yourself,
Mm-hmm.
To get to a decent rate of return on the, how much does the cash value go up relative to the premium payment, depending on the specifics and what time period you're looking at, it could take anywhere up to like 7 or 8 years just to break even, in terms of how much premium dollars you've put into what the cash value is on some of these things,
Mm-hmm.
depending on how they're structured. Whereas we are curing the policies that we're acquiring in the secondary market to then put into the pool. We're only going to get them if they're already in that sweet spot of their life cycle. So that's another advantage, that if you like life insurance as an asset class, doing it this way, you leapfrog over those first 7 or 8 years when, the annual rate of return isn't attractive.
The next question is, it's a bit sensitive. I'm not even sure how to ask it, but um, like, if I do this, I mean, does the government know I'm doing this? Like, maybe that's the way to ask it. Like, um,
Yeah. Oh, yeah. I don't know if this is what you're at. So, yeah, I mean, this is all above. Yeah, we're making this. So to be clear, like, we're on the cusp of launching this particular element. We
Mhm.
have another thing called the policy ledger, which already is up and running, where people can just register their life policies on a blockchain,
Mhm.
um, to be able to notify beneficiaries, if a mortality occurs and things like that. So that's already up and running. If people go to infineo.ai, they can see we've got like 140 million in death benefit on chain. But what I'm talking about now, this is not yet up and running yet. We're still, filling out the paperwork and whatnot. But yes, we are pitching this to institutional investors. So yeah, this is all in the daylight. We have, exemptions with the SEC and everything. This is all above board stuff, if that's what you're asking.
Is it an SEC? Is it a security?
Yeah. So life insurance itself is not a security,
Right.
but these tokens that are fractional claims on a pool of such policies, that is a security. And so, yeah, there's lots of tokenization companies that are trying to, thread the needle, and it's like gray area. But with us, we thought we don't want to be, just hoping on interpretations that some lawyer writes in a memo. So yes, to answer your question, this is a security. We're saying it's a security, and we're, registering it as such.
All right. And I guess if we want to know more, we can go to infineo.ai.
Yeah,
Um,
there's explainer videos and white papers. Yep. So infineo.ai is our website.
right. Which Dan will have to do a second or
Dan,
third
you're
time
gonna get up to speed,
before it
Dan. Yeah.
penetrates his cranium, because I did not get it the first time. I'm going to tell you. So the way I really first heard of you, Bob, is by your book, The Politically Incorrect Guide to the Great Depression and the New Deal. um, which explains how um, FDR is really not necessarily FDR and Hoover, not necessarily the hero that everyone makes them out to be, um, and puts the blame for the Great Depression in uh, in a different place than the conventional sort of arguments. Um, and I think and I honestly do, if anybody's wondering, I think we do need to talk about this now in the year 2024. I do, because I think that same extraordinarily heavy hand of government, it has a lot of potential to create maybe not a Great Depression 2.0, but tough times. Let's just leave it at that, maybe for now. As an economist, what do you think of what I just said? Am I in the ballpark? Am I right to be concerned about this at this time or no?
Oh, I think so. And the context of this particular book is I had a previous installment in this politically incorrect guide series that Regnery put out, just the politically incorrect guide to capitalism. I think that
Mm-hmm.
was 2006 or something that came out. And so then when Obama, I can't remember if he had actually gotten elected at this point or if but they approached me because everyone was comparing, there was the financial crisis and people were comparing our situation then to, saying, oh, it's like the repeat of the 30s. And the conventional wisdom was saying, yeah, let's not make the mistake that Herbert Hoover made, how he was, a tight-fisted conservative right-winger who just said, nope, the Constitution doesn't allow me to help starving people, sorry. And then thank goodness FDR finally came in and gave us the New Deal and the government opened up the spigots and got us out of the Depression, right? So that's kind of the conventional narrative that people were
Mm-hmm.
batting around, when Obama was coming in, to contrast it with, the tight-fisted George W. Bush. And so, and just like there, like what happened in the 30s, and that's the point I was making in the book, that, as you say, Herbert Hoover was actually the biggest spender in peacetime history to that point in U.S. history, right? And he was, in his memoirs after the fact, Hoover was trying to say, I don't know why I'm getting this bad rap that I didn't do anything. Look at all the stuff I did. And he wasn't lying. Like he, was saying, look, I ramped up deficit spending. I did this, I did that. And so, and then in the 32 campaign, when FDR was running against Hoover, FDR was railing against Hoover's reckless deficit spending, just to give people an example of, that's where the debate was at the time. So it's kind of ironic that, so sort of ex post. And I even have quotes in the book, like some of FDR's advisors years later, like well into the New Deal in the late 30s, admitted, yeah, everything we did when we first came in was just what Hoover had done, but more so, like in other words, he had like the New Deal light and they just ramped it up. So, and anyway, so that's just the conventional wisdom, is totally wrong on that element. And yeah, I think you're right that I'm sure if you want to talk about this as well, that I think the Federal Reserve set us up for a big crash, that we may be entering as we're recording this, seeing the incipient beginnings of that. And so, is it going to be the next Great Depression? Not necessarily, but
Yeah.
certainly the disturbances are there. And with a lot of this stuff, this last point I'll make here, it, in my view, and what I say in the book, the loose monetary policy of the 20s is what gave us the 1929 crash. Had the government reacted the same way that it had historically, there would have been a really bad 18 months, and then it would have been fine. But the difference was what Herbert Hoover did, in particular, like freezing wage, like telling businesses don't cut wages. So that's
Right.
what caused the Great Depression, and then FDR came in, so that's why it lasted for a decade. So likewise, this time there's going to be a big crash no matter what, but it depends what the people in power do in response to that, to see, is this going to just be, oh yeah, that was a bad recession for 18 months, or is it going to be, go down in history as one of the worst things since the 30s.
Yeah. It's funny because don't cut wages, and FDR also supported prices. Like they both went out of their way to make everything more expensive. It seemed like, um, but Kamala Harris is suggesting what I would expect, which is an attempt to keep everything from getting too expensive by fighting what she has comically referred to as price gauging, and we all know she means price gouging.
Oh, I
Um,
didn't catch that. She called it gauging. That's
yeah,
great.
yeah, that's it's people have been making fun of her
Yeah.
for several days here because she just can't even get the word right. Um, apparently completely oblivious to the fact that in the past 40 centuries, this has been tried a few dozen times and it never ever works. It always creates shortages, and then once you get the price fix out of the way, then you get oftentimes a huge resurge in rising prices to kind of fix it. um, I find it very odd that politicians, they just, I guess maybe you think they're feeling out FDR and Hoover, they were feeling out the time that they lived in. They said, well, let's not let wages go down. Hey, that'll go over big. And let's not let the price of certain commodity items go down. That'll go over big among certain groups, farmers or whoever. And now people are wincing still. They're having trouble because on average prices have gone up 20 odd percent, and a lot of them have gone up a lot more for basic items. So maybe she's just sort of feeling out the time, and she's a product of her time. So she said, well, price controls, no more
Mhm.
price gouging,
Yeah. Yeah, I think
I
just
suppose.
politically on her, I think what happened is, or part of this story is that during the Biden term, prices started rising pretty rapidly. 2021 to 2022, and all on the way up, guys like Paul Krugman and so forth, even Stephanie Kelton, the MMTer, were saying, "Oh, this is
Mm-hmm.
transitory. It's supply side shock. Supply side bottlenecks. Don't worry. We don't want the Fed to tighten prematurely. That's just going to it's going to tip us into recession for no reason. Hang on. Don't listen to Fox News. They're exaggerating." And then when it became obvious that, like, oh no, this really is, then like the line shifted to, well, actually, if you look at it, the median income workers, their wages have risen faster. It's actually the rich people that are getting hurt in this. You know what I mean? Whereas if Trump had still been in
Yeah.
office, I'm pretty sure rising grocery prices would not have been spun to good for the poor people. So they did that.
Right.
But I think Kamala's, campaign staff knew you cannot run on, yeah, inflation, either it didn't happen or it's good for you. Don't worry. It's reducing the real value of your credit card debt, which is kind of like what some of the, Democratic economists had been arguing in 2022 or something. So I think they realized we can't ignore this. Well, we're not going to blame the Fed. We're not going to blame, our stimulus checks. Well, okay, corporate greed. What else can we, you know what I mean? So I think that's, they realized they had to do something because otherwise this was giving Trump an issue on a silver platter. So they had to also acknowledge the pain at the grocery stores, but they couldn't, since they were the ones in office, they couldn't blame that. So they had to, corporate greed all of a sudden spiked in 2022 for some reason.
Yeah, that's right.
Yeah, exactly.
Yeah,
There's so much
corporate
nonsense.
greed's.
It's frustrating beyond belief with the messaging from just all around that whole issue. And then as soon as it's floated, the snapback, the criticism to it was, I think, so strong that it hasn't. I think the message has gotten through, but probably not. But
Yeah, I don't know how you guys feel, but I was surprised pleasantly. Like there were pieces in the New York Times and stuff saying like this is not a good idea. So I don't know if it's just like her corporate donors or something were behind the scenes were like, no, this doesn't actually make sense, or hey, and certainly with the taxing, don't tax our unrealized gains. I don't know. I think there was a lot going on behind the scenes, but yes, to your point, Corey, it was not just uniform, everybody lined up that you would have expected behind Kamala on this. Like I saw a lot of people questioning, saying, yeah, I don't know if we want to be doing this.
Right. So I wonder, this brings up something else I was wondering about. Is it sheer narrative to get us to accept Kamala that they finally caved in and said, well, Joe Biden's debate performance was so bad we can't look away. So I just think, well, that's part of the story they're telling. But then we get so much pushback on something like unrealized capital gains. I think, hey, fingers crossed, maybe like people are actually just waking up a tiny bit. I don't get too optimistic about these things, but maybe there is a real pushback somewhere in our economy, somewhere in our country. Enough people are kind of fed up with the I'm going to fix everything by coming down on the economy in a very heavy-handed way. Unrealized capital gains would be an absolutely the most heavy-handed thing, right? As soon as you tried to grab them, they disappear because you'd have to sell the asset, and people would be selling like crazy to pay it. Um,
So
I'm torn. I want to be hopeful, but I'm torn.
okay, well, I'll give you a way that you can make it theorizes or have a hypothesis about what happened that is not too optimistic, if that helps. And so, yeah,
Okay.
I get, not that I have any access,
Sounds appropriate
to
for the
stuff,
time. Yes.
not that I have any special insider information or anything, but my take on what may have happened is, so yes, for a while it was clear that Biden was not doing well, and more videos were surfacing, and they were for a while, trying to say, oh, these are doctored, this is AI, or this is taken out of context. He's great. He's a spry man. He's really sharp behind the closed doors. And then, with that debate performance, they couldn't say that anymore. I think they just realized that, the jig is up. And so, but then, there was a sort of like open house, open audition night or something. And there, is it going to be Gavin Newsom? And people were not even talking about Kamala Harris. Like, it was just kind of a given. I mean, it's hard to remember that. I mean, this was fairly recent, but the national discussion at that point, like, she was just a nobody. You know what I mean? Like, she had done so poorly in the previous cycle. She didn't even win, make it through one primary. I believe she had to drop out. So this time around, like, nobody was talking about her at all. It was Gretchen, the Michigan governor and so forth. And even people were floating stuff like, what about Michelle Obama? Like, they were just crazy ideas that they were floating around. And there was not, and then, I think it was, and Kamala Harris too, she was in an awkward position because she still, until Biden officially moved out of the way, she kind of had to officially say, no, he's still good. He's the best person for the job, because otherwise it would have looked unseemly if she were to, like, stab him in the back while she was technically his subordinate. And then guys like Van Jones and stuff were like going out publicly and just saying, you can't skip over her. And I think she and her allies like told the rest of the Democratic Party, through back channels, if you just try to skip over her, we're not going to let that go. We're going to say she was a woman of color, the VP. What are you talking about? You can't do that. And so I think they realized they didn't want to have that fight. So they went with her. And so if that story, if my story is correct, and that's kind of what was going on behind the scenes, then if she starts coming out talking about taxing unrealized gains, I mean, there are a lot of, multimillionaire and billionaires funding the Democratic machine right now, Democrat with a capital D. And so a lot of those people would not want unrealized gains to get taxed. And so I could see them being ones like, okay, well, we're going to have the New York Times run some op-eds as to why this is a stupid idea. Are you sure you want to fight us on this? That's kind of what I think may be going on. I don't know.
Yeah.
And looking at all this from a little higher up, I mean, this is an investment show after all. Does it bother you as much as it bothers me that I have been absolutely, after years, and I continue to say, I don't care if Trump or Harris gets elected because it doesn't matter. They all grow the government. They all spend. They all borrow a ton. It doesn't really matter. And feel free to disagree with that too. But I can't help, though. I get sucked in. I just it's the Michael Corleone moment. Just when I think I'm out, they pull me back in. I watched the whole frickin' debate. And I didn't want to, but I felt like I kind of had to. I don't know. I'm not even sure if there's a question. Maybe I just think maybe I think Bob is like my libertarian economist therapist or something. That's why I invite him on the show, just so I can complain about all this stuff that I have to pay attention to.
Yeah. Is the fiat money in the room with us right now? Yeah.
Yeah, that's right.
But I mean, just to respond to that,
it
so
drives me a little nuts.
Certainly, I understand the cynicism, and I think part of the magic, if that's the word, of this two-party system is just how there's really historically not been that much difference between the Republican and Democratic nominees, and and but it gives this illusion of these fierce debates. I don't just mean like the literal TV debate, but just in general, like the policy debate. And, oh, wow, I want to raise capital gains to this amount, and you want to do it to this. And, how much should we escalate the war in this country over here? Should it be 8% or 12%? And that's what we fight over. So I think that's generally true. On this site, with the Trump, I think there is something else going on, though. And not because, he's such a great guy standing up to the forces of darkness, but just I don't think he's in their club. And so the analogy I used to somebody else the other day is because somebody it's more like if you want to say that Kamala Harris is Darth Vader, it's not that Trump is Luke Skywalker, he's like Jabba the Hutt or something. You know what I mean? Like, so they're not good people,
Sure,
but they're not
sure.
technically a part of the same apparatus. And so there's, turf squabbles at the very least. So that's kind of my take on this. And I think that specifically with Trump is he's just so unpredictable that if you've got this like deep state or whatever term you want to use apparatus of, people who are, people that are career bureaucrats and they kind of run the show, and we're the analysts at the CIA and we're these people over here, and they, it doesn't matter who the president is, we kind of just keep the machinery of state going. We've got these longstanding arrangements with people, with our counterparts at other governments around the world, and we kind of run planet Earth as far as the day-to-day stuff. That somebody like Trump coming and you have no idea what he's going to say at the next press conference, they don't like that. They want it to be very predictable, I think. And so I think that's part of the issue and why they recoiled so strongly from him when he first came in.
I agree. If there's anything good you could say about him, it's that it seems, and I'm an outsider, I'm just looking in from the outsider, but it does seem that he puts a genuine sort of fear for one's job into many government bureaucrats.
Right.
A lot of people might fear for their job. They might, oh, geez.
Yeah, I mean, just to give a specific, like,
I believe that.
I haven't been with them for a while, but I used to be the chief economist at the Institute for Energy Research, which was a free market oriented energy think tank, and so that was my beat for a while. And so when Trump came in and pulled out of that, those Paris Accords, I cannot express to you just what a big deal that was. Like that was so inconceivable in terms of the rhetoric. I mean, that's not something that George W. Bush would have. Bush actually expanded subsidies for renewables and things like that. And a lot of the green targets and stuff that's built into our energy codes and things, that all happened under the Bush administration, right? So even though he's the oil man from Texas and everything. So I'm just saying, like, how quote radical Trump was on certain things when it came to like the EPA or whatnot and the climate change stuff. He really lived up to the reputation as, oh my gosh, this guy's just coming in and flipping tables over. This guy's a nut job as far as like the left's rhetoric. And so yes, I'm just agreeing with you, Dan, that I mean, he could just say, well, why don't we just cut the corporate income tax rate and put tariffs in place? You know what I mean? Like just start throwing out pretty big ideas instead of just tweaking stuff that anybody else would do.
Right. Yeah. But in the end, I've noticed over time, conservatives are never fiscal conservatives, are they? I mean, nobody seems to be able to make any headway with the idea that that the government spends way too much and is probably way too big. It's Leviathan with a huge appetite.
That's one of the great missed opportunities. I don't know what you want to call it, but I mean, I'm in late 40s at this point. So when I was first getting politically active and interested in these economic things, I used to go and get like the budget data from the 80s, and I would just sit there and study those. And tax revenue went way up under Ronald Reagan, and yet what's the lesson there? Oh, Reagan's tax cuts for the rich is what mushroomed the debt. And I mean, so if they had just not even like cut spending, but just limited the rate of growth to a lower number, then it could have worked. But instead, they kind of and I get, well, we're gonna stand up to the Soviets, and we got to spend the military, So anyway, it's just it's too bad that they can't, and you can understand why, because spending is popular. The Republicans might like to spend on some programs rather than others, and the Democrats have their mix of things to spend money on. But you're a popular guy if you're handing out money and bringing it back to your district.
All right. Now I want to ask you a question. There's no way you can answer, but it'll be fun to think about it for a minute. Speaking of all the money that these folks spend and the record amount of debt, over 35 trillion now that they have racked up, at some point, Bob, like, doesn't that chicken come home to roost? I mean, I feel like you have to give it to the can kickers. They have kicked this can. They have successfully kicked this can down the road. I mean, they've just belted this thing, and it has taken off out of sight down the road. Does it ever matter? Will it ever matter? It's an honest question, because at this point, I would have thought, 35 trillion. We spend so much more than they bring in, every year. It's just, when does it blow up? And I
Right,
don't
right.
want it to blow up. I
And
like
how
my
does it
life,
blow up?
but
Yeah, it's
yeah,
yeah.
that's the other thing. Well, we think inflation is a big part of how it blows up, but even that, you're right, Corey. No, even that is an honest question
Yep.
at this point. When does it
So
blow
yeah,
up?
I share my
I don't
sentiments
know.
are exactly like
Help me.
what you guys are expressing here, because yeah, that's what's holding me back from being so well. Clearly, what's going to happen is because when the rounds of QE were happening amidst, I think there were 4 years in a row when the Obama administration had $1 trillion plus deficit. And now that seems quaint. That doesn't seem like a big deal. But at the time, it was like, what? The deficit's above $1 trillion? Like, it was crazy. And they did it 4 years in a row. And it wasn't like because we were in the
Yeah.
midst of World War III or, fighting alien invaders or something, which, okay. But so to answer your question, yeah, I mean, there's like, just to give two examples of things that when I was younger, and again, just getting into this stuff, it was like people were warning, if we don't reform entitlements at some point, they would give some date that was well into the future, the amount that of FICA payments coming out of workers payroll taxes is going to be lower than how much they're having to pay out to Social Security beneficiaries in that year. Like, at some point that's going to happen if we don't change. And that just seemed like, whoa, that would be a bad situation to be in. And well, surely the adults in the room will take it. We blew past that years ago. I think it happened after the financial crisis that happened. Okay. And then another milestone would have been, if we don't change our ways, CBO is showing by X year that the federal debt, is going to surpass 100% of GDP. And well, that sounds like a bad thing, right? And it was like 30% in the W. Bush years, and then we blew, So that's what I'm saying. That yeah, all these things that would have been, or another one was, well, yeah, if the Federal Reserve ever added to its balance sheet that year's deficit, you could argue it was monetizing the debt, and then the dollar would crash but that wouldn't happen. And that happened, at least once, during the rounds of QE, just with the way the numbers worked out, that the Fed added to its balance sheet exactly what the
Right.
Treasury issued a new debt that cycle. And, the dollar didn't crash. I was, oh no, it's because quantitative, so anyway, I'm just saying, yeah, a lot of things that were hypothetical when I was younger getting into this stuff have now happened. And yeah, the world hasn't collapsed and the dollar's still strong. And so it does make you wonder. But yeah, I still think that no, this couldn't continue indefinitely. Lots of trend. In February, I was on a zero hedge debate. Jim Rickards was on my side. We were arguing against two other guys that talking about the fate of the dollar, and we were saying that we do think the U.S. dollar is not going to be the world's reserve currency, in the not too distant future. Like, I do think that's coming, and you can see just the share of the dollar in forex reserves has trended down since 2000, right? So if you just extrapolate that trend forward, it falls below 50%.
True.
I think like in 2042 or something like that. And I think it's going to be sooner than that, just because I think things are going to accelerate. But so I'm just saying, it's not like you can see these trends in motion already, and I think the world is shifting away. But yeah, there's a lot of inertia, and I do think if there's a panic and in the next year, probably a lot of investors around the world will rush to treasuries, thinking that's the safest place to go. So that will give a temporary boost to the dollar. But at some point, yeah, I think the Fed may bail out Europe in the next big go around, but then the one after that, I think, will be the dollar itself will be the referendum, and people will say, no, I think I want gold or Bitcoin or some mix of commodities.
Right. I do believe in the end, gold becomes a last man standing at some point. Maybe not even during my lifetime, but um, I also have come to feel like there's so much, there's so many dollars outside the U.S. Most folks don't realize, and there's so much demand in terms of like um, the BIS puts out, Bank of International Settlements puts out data on the amount of ex-US dollar denominated debt. And it's trillions. It's like 12 trillion, I believe, was the last time I looked at it. I went to look for the numbers recently and they weren't in the same spot. So I'm not quite up to date, but call it 12 trillion. That's a lot of demand for dollars. And I've always felt like, well, I haven't always felt, I've come to feel like before we see a big problem in the US dollar, we'll probably see it in all the stuff I tend to think of it priced in, like, euros and yen, and which has had some volatility lately, and pounds and the other things in the dollar index, but really euro, yen, pound. And every now and then we see a little blip in one of those currencies, but again, um, it's all holding together, and the U.S. economy holds together, and the dollar holds together. And years ago, I went to the Freedom Fest in Las Vegas, and I thought we're all complaining a lot about the government, but maybe we don't really truly appreciate how utterly, absolutely powerful and really hard to screw up
Mhm.
the market is. Even if it's where it is right now, right? Nobody would call this like a free market. It's people would call it a mixed economy. We used to have that expression, or whatever you want to call it, incipient socialism, whatever you want to call it. That's what we have. But even that, with all the momentum of the past behind it, um, maybe it's just so powerful. Maybe do I worry too much? Are we worrying too much about this stuff? Am I too worried about the debts and the deficits and inflation and the absolute shit show? I'm sorry, in DC every 4 years. Um, am I really not appreciative enough of the absolute power of markets? Is
I
that what I'm
I
doing
don't
here?
think that's what you're doing. So yeah, there are like my standard of living right now. I wouldn't want to swap with somebody in 1975. To be clear. Yeah, right. So there
Or
is that element.
anytime.
But what I do
Yeah.
think though is, so the danger. I don't know if this is answering your question. To me, the danger over the next 20 years, I'm not worried that the U.S. is going to install like top-down central planning, like Marxism. I think it's moving more towards like a technocratic big
Mm-hmm.
brother state. Kind of like, I think the U.S. and China are both trending towards the same. They're kind of meeting in the middle with the same apparatus. Like, yeah, like China is better now than it was under
Yeah.
Mao, but they're not moving towards a Thomas Jefferson type vision of how the country should look. And so, yeah, I think that the U.S. too, that you're just going to get more and more surveillance, sort of like the merging of big business and the government. Everything being, drones policing the streets and whatnot. Like, I think that stuff is all coming. Social credit scores and like ways that they can cleverly get around. Like, you can have constitutional protection. It's just if you speak out against the rule, speak out against DC, you can't rent a hotel room anywhere and no one will rent a car to you.
Right.
Like, that's kind of how they do it in China, where it's technically the
Right.
government doesn't even have to do anything to you, but they've got like this interlocking hierarchical system of social credit scores where the hotel won't rent to you if you speak out online against the government. And why not? Because then somebody else will punish the hotel. You know what I mean? So it's like a list of potential threats, and the government really only has to sit at the top. And so anyway, it's kind of an interesting dynamic. But yeah, that's to me what's coming. It's not so much that people aren't going to be able to get food in the long term. Even though I am worried about short-term disruptions in, the power grid and stuff like that. So the people who are like quote prepping, I don't think they're
Yeah.
nut jobs. I think like, no, you may be glad you did that.
Yeah. I
Yeah, for
mean,
sure.
my own wife started buying
Mhm.
all this. Like, there's all this stuff in the pantry. It's like freeze dried, whatever.
Yeah, no, I bought
And
this
she,
power.
she,
I bought this
yeah,
power station that can
Yeah.
hook up to solar in case the power grid goes out for a while. Stuff like that. I have kids,
yeah,
family, and all. Who knows what's going to happen? I feel like, to Dan's point, I feel like I was a lot less worried when I like had no clue about any of this stuff. Not saying I
Mhm.
have a clue at all now, but the when I was like really outside of you know finance at all, I'm thinking back to that time. I was just kind of bouncing along, oblivious. But there's good and bad of that. But now you're in it, and you wonder about all these effects and how it will go. Not sure it
mhm,
matters, but but it does.
yeah.
It's I don't know, it's an
So
interesting thought,
yeah,
Dan. Yeah.
here's what I'm thinking though, right? Um, we have a lot of listeners and we have lots of subscribers, and we give them a lot of advice about buying stocks and bonds and options and things. And it really, really helps if you can sort of be that um, or it has helped, to be quite precise. It has helped up to this time, um, throughout my lifetime, born in 1961. If you could just be a perpetual optimist and get really greedy when the market
Hmm.
and the economy look really bad. And so the dilemma is, it's like Corey was suggesting, when you're looking at it from a distance, when you're young, maybe it looks one way, but when you're in it and you're working and you're allocating your capital and you're me and you're talking to people about allocating your capital. And on the one hand, you say, my God, stocks have never been this expensive by some measures. And a couple of years ago, we had bonds in the 5,000-year history, right? According to the yield book, um,
Hmm.
they never were that expensive, right? Interest rates were never that low. It was insane. Um, and this is the backdrop that I'm faced with today. And I want to be that optimist because that guy has just gotten rich over time. If you can really do that and be that long-term oriented guy, all Dan's worries, all this stuff about debts and politicians, like, you just brush it right off. Up to this moment, that's been the way to go. And yet I can't quite get there. I don't know. Maybe are you not the guy to try to get me there?
It's,
Maybe, I don't know.
I do see your dilemma,
But you see my
and yes.
dilemma
So
as an
again,
investor.
just to reiterate, I do think those structural forces are there. Maybe part of what happened in terms of why you're doubting your instincts and whatnot is when the rounds of QE came in, and again, the Obama administration had like 4 years of $1 trillion plus deficits or whatever. I wasn't using the term hyperinflation, but I did think inflation was going to break double digits. I even, bet one of my colleagues to that effect. And, I lost that bet. And Paul Krugman was running victory
Mhm.
laps about, this guy Murphy, he doesn't know what he's talking about. And so I think that kind of
Right.
told people that, oh, yeah, maybe it used to be the case that printing boatloads of money would make the currency fall, but apparently that's not true for the US dollar. And then the more recent stuff, like what happened after COVID, I think that may have like recalibrated people. Like, no, it does look like, at least in some cases, the U.S. government's not omnipotent. If they print boatloads of money, or the Fed does, and they just mail checks to people, and especially if they tell people not to go into work, that makes prices go up. Okay, so maybe they can't, just do whatever they want by
Mhm.
dictate, and there still is some underlying economic reality. So I think
Right.
there's that element. And yeah, all the stuff you're
Right.
talking about, like the
Yeah.
euro dollar market, all these many
Mhm.
trillions of dollars of dollar denominated liabilities and assets that foreigners hold. That's a complication that I think does show why there's so much inertia and why they can get away with running such reckless policies. The other thing I would say, as far as optimism, is Powell is not money printer go burr. Like, if you go look, they've jacked up rates pretty aggressively, and the Fed's balance sheet, has been trending downward. M2 has come down. That's unusual. Normally in these cycles, during the contractionary austerity type phase, M2's rate of growth just declines, but it doesn't, the whole thing doesn't just start turning around and coming down. That's been happening recently, or it may have stabilized at this point. But so I'm just saying that there is a sense in which Powell really did come in and kind of maybe not slam on the brakes, but certainly push down the brake fairly quickly. And so I do think there's that element that at least he thought, or the people that are backing him or whatever, that coalition saying, okay, we have to kind of, we can't be too reckless here. Otherwise the dollar might crash. So I do think there's that element involved as well.
Right. Yeah. I wonder about I wonder about him. I wonder about Powell and the actions of the Federal Reserve quite a bit. Like, that's another thing. It's like I wonder about it. I feel like I wonder about it too much. That's one of those things that for decades, like, you really didn't care if you were, if you were paying attention. You just, stick to your guns, buy your stocks, hold them for a long time, and you were fine. Um, but now we had, that 40-year from, like 20% Fed funds down to like 0,
Mm-hmm.
then we're back up to 5, right? I have to believe that 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 long trend has a lot of momentum behind it, and that it's really, really hard. I mean, the fact that he got to 5%, I thought, okay, wow, all right, this is serious. But I have to believe that at some point, dovishness it still rules the day, and that the support, like they say they're in the business of doing price stability and full employment, but I think they're really in the business of supporting asset
Oh,
prices.
yeah, absolutely. I agree
I
with
think
that.
that's
So just to
really
be
it.
clear, I'm not saying like, oh, thank goodness Jay Powell's in there because he's a great monetary economist or something. I think it's in there like
No,
he
no,
like
yeah,
realizing if we just
right.
kept things ripping the way right after COVID, then that would hurt the big banks and the financial sector or whatever. I mean, so I think that's what was coming in to shore up, was just some of the heavy hitters in the U.S. financial sector. Um, so so there's that element. I think too, partly what happened is, and I don't know if this is something you guys have been covering, but for a while I have been pointing at the inverted yield curve, saying, hey, historically that is a good indicator, and it dovetails with my own views about in the Austrian school what causes the boom bust. And so I have been thinking we were on the cusp of a bad recession for a while, and the yield, at least looking at the 10 versus the T-bill, that's been inverted for longer than, is normal. And I think that's partly what happened. Is I think the reason Powell could raise rates that aggressively is because the unemployment rate wasn't spiking. I mean, I think in previous cycles, if they had slammed on the brakes as hard as they did, you would have seen, the economy tip more quickly than it has. So I think that's part of it. Like they kept raising, and like, okay, unemployment's still, at least the official numbers, and I don't know if you guys want to get into it. Like, I think there is something screwy with the labor market, but in terms of the headline number, the unemployment rate was not zooming up. And so, okay, and CPI was still way above target. So I think, they kind of had the Fed could not have started cutting 6 months ago, just because how could they have justified that?
Right. And core CPI, as we speak today, 3.2. I mean, we're still,
I think another
north
thing people
of the
forget with that
ultimate
inverted
target.
yield curve observation reminded me, because we're getting close to the end of like the typical range of when that's an indicator of a recession. I think it's like 24 months on the high end, where the recession typically follows when after the yield curve first inverts. But I think this time I forget this too often. The amount of stimulus that was in the economy at the time only really started to wear off like in the middle of, I mean, much later than you would have thought. I can't give like the exact date, but I feel like we're to the point where the tightening was actually tight, and so that's something to the point about just government intervention in general, like
Right.
the way that distorts things. It's pretty incredible.
There's that, and also, I mean, again, we're kind of ex post trying to understand like what's going on. If things had just gone on like the textbook way, I would not have gone back and looked at all these other possible things as why is it different. But
Yeah.
They shut down the whole economy, or not the whole, they shut down a big section of the economy and then opened it up. So that's unusual. You know what I mean? So I can see how maybe there was a confluence of factors where by letting people start, go back to work, that was so, so healthy for the economy that did give it some legs. That's why, even though when they turned off the monetary spigots, that didn't cause the thing to tip into, like, the real economy to tip into a recession as quickly as it would have in a prior cycle, because in prior cycles it's not that they first shut down the economy and then said, okay, now you can go to work again.
Right.
Right. Yeah. I mean, the S&P 500 corrected 25%. Then it's back to new all-time highs, and away we go. And hey, that was unpleasant, but hey, it's behind us. We're cool. And yet, at this moment, I mean, you can point to all kinds of weakness. One of my favorite ones is the SOM rule, that says that unemployment has risen at a rate that has meant since 1970 that we're already in a recession. And yet here we are, like, um, the market is within, I think,
Well,
3 or
what's funny on that,
4% of a new
I
high.
confess I didn't click through to
And,
read her actual comments, but I saw headlines when that, officially happened where Claudia Sahm herself said, no, this time's different. Like, I don't know, my indicator's wrong. And was she just saying that because
Exactly.
she
Yeah.
doesn't want to give people,
yeah,
a reason to
yeah,
vote
I
for
know.
Trump, 2 months before the
Yeah,
election? I don't know, but I'll put it this way: she blocked me on Twitter. I'll just get that out. So maybe I'm just mad.
maybe.
But yeah,
Oh,
over the holiday, yeah.
you said something
Okay.
true then. Yeah.
Well, I think she
Yeah.
did
Yeah.
I think she did it because she works for an asset manager now,
Right. Right,
right?
right.
So
Yeah, it could be that. So
you're
yeah.
not
So,
going
but
to
she
tell your
seemed
clients
very
there's a
political
recession.
on
Look the hell
Twitter.
out.
And I was kind of trolling her a little bit, and she blocked me. But yeah. So I think she definitely did
Oh
not
yeah.
like it when right winger
Yep.
types were using her indicator to try to argue that, oh yeah, this Biden economy is supposed to be so good. Well, look at the Psalm rule, and she was saying, oh no, don't rush to conclusions here.
Yeah. I mean, to be quite fair, I have to say, okay, because who knows what indicators could go wrong at what point, right? But you know, it was just, it was too perfect. It was too perfect that this person who no longer works for the Fed now works for an asset manager. Whoa, 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 whoa!
Well, there's a similar
Just,
thing too, where
it's kind of funny.
like Ben Bernanke had
Um,
a bunch of academic papers about what the Bank of Japan should have done, like back I think in the early 2000s or something. And then when he became head of the Fed, and then 2008 happened, and he started
mm,
paying interest on reserves. A lot of my colleagues who in my view are more trusting of Federal Reserve officials and academic economists, they were kind of mystified, like, well, why is Bernanke paying banks to not make loans? That's contractionary. Why would he do that? And to me, it was like, because now there's a difference between when you're a tenured academic professor versus you're working, and able to hand out free money to banks. That it's not a matter of what changed in his mind intellectually
yep.
necessarily. It might just be the different position he's in at the moment.
Right. Yeah.
Yeah, they respond to incentives. I'm convinced of that. Ever since I looked into the history of Arthur Burns and Richard Nixon, I've abandoned all notions that the Fed is
Mm-hmm.
anything, that the Fed is independent, that is anything but politically, captured. It absolutely is. Um, are you? We mentioned T-bills a little while ago, and I have to say that's been when T-bills got back to 5%. I thought, well, you know what? Things kind of suck right now, but I have to say investing is back, because if you can roll T-bills at
Mm-hmm.
5%, you have this hurdle rate in your portfolio. And instead of absolutely having to speculate on expensive tech stocks or whatever you feel like you had to do otherwise, you can sit back, get a decent return, and then look at the market and say, show me. You don't feel so, when you're getting 5% in T-bills, you're not throwing money at, the ARK fund and NFTs and whatever else. You know what I'm saying? Um, but again, again, if they keep cranking them out this way, and most of the funding for the past couple of years have been T-bills, like they keep cranking them out at some point. Um, and Ray Dalio says we have reached the
Mm-hmm.
point where people are starting to not want the bonds anymore. That's, he puts everything in a very simple, basic way. And I'm like, God damn, man, I hope they still want the T-bills, because that's, I have to admit, it's my foundation right now. T-bills and government guaranteed recent issue MBS, right? Because if you could get 6% in those, and they're guaranteed, and they've got 30-year mortgages behind them, um, that's a great foundation for a portfolio. But I don't know. I
I
worry. I
don't, but
worry about the
that
T-bills. Do you own
should not be
T-bills, Bob?
construed one way or the other in the grand scheme. But let me just say though that it's I agree with your
Okay.
sentiment. So a lot of my academic work has been on, like, my dissertation was on capital and interest theory, and so yes, like, to me, what's insane is just how I guess I'd blame Keynesian economics for convincing people that low interest rates are a boon to the economy. It's like a gift that the central bank gives the economy, and that the only downside is, prices, price inflation might be too high, and that might bother some people. But in and of itself, low interest rates are, helpful. It's like, giving them an energy drink or something. And I think that's wrong. I just, your remarks there were kind of overlapping with my own view that even the Walter Badgett, his name looks like a bag of hot. His famous dictum, he would say, like, in a time of liquidity crisis, he wanted the central bank to lend freely, but he said, but at a discount rate, but at a penalty rate, excuse me. He wanted the discount rate to be at a penalty, right? So his point was, yes, if there's institutions that are illiquid but solvent, you know what I mean? Like their underlying fundamentals are sound, but they have a cash crunch. Go ahead and you can, quote, bail them out if you want. Well, that's not even the right word, but give them a liquidity, loan for liquidity purposes, but at a high rate, because he didn't want, like, if a firm needs interest rates to be 0.5% to make things work, they should go under. Like, you don't want them surviving because of cheap money. And so that's kind of the insight. And I think that's been largely lost.
Right.
And so, yeah, to me, that 7 years we had when interest rates were basically 0%, I think that's spawned a lot of malinvestments, and kind of the underlying structure of the economy is all screwed up. And a lot of, more economists that are not in the Austrian school, their models are too crude to even capture that sort of possibility. Whereas in the Austrian view, it's like a long-term structure of production. And, you need to start building stuff now to be able to finish the thing 10 years from now, that kind of stuff. And so, yeah, if interest rates are all out of whack, that causes problems besides just, CPI is higher than we would have liked. No, there's real stuff going on. It's not just dollars buying, widgets.
Right. Yeah, I worry about the fact that there's another thing I worry about, where I wonder, am I worrying too much? 40 years of declining interest rates, and then from December 2008 to March of 2022, zero a lot of the time. Like, to me, as someone who I can't even call myself an Austrian because I probably haven't studied it closely enough, but that's where my heart is anyway, if my head isn't informed enough to say that I'm an Austrian. The potential for malinvestment had to be greatest, almost by definition, during that period. And yet, it's like, 25% correction on the S&P, we're good, and we're off to new highs. I wonder where was it all? Was that low inflation real during that time? Is that the point? I just, so much of what has happened economically just confuses the hell out of me, I have to admit. So I wind up, like, I don't try to predict anything. I just try to prepare the portfolio for various risks. What do you think? I mean, shouldn't that period have produced, like, and I do think we're still in a huge financial mega bubble. And shouldn't it have produced such a thing? And shouldn't the thing have started bursting by now? Has it? I mean, can you help? Can you help me out here?
Yeah, so I'll try. I agree with you
economist
that,
therapist.
The fundamentals are horrible. And again, like, just, you would think treasury yields would be a lot higher now than they are. We're talking about how the T-bill, it seems high to us now because it was basically zero for so long. But I mean, historically, the T-bill right now, and then given how much government debt has been issued, if you had, asked us in 1990, suppose in the year 2024, government debt to GDP is 100% or whatever the number is, what do you think, the 10-year yield's going to be? I think we would have said a higher number than what it is right now.
Right.
So, yeah. Right. So that's
a lot.
And if we
would have
also
said double digits
CPI
all day
inflation rate
long
was too, that would have made us even more confident. Oh yeah, then the 10-year yield must be, whatever, 12%. So there is that element. Now, I have heard some people, kind of to your earlier point, Dan, about, is the economy just better than we realize and we're just taking it for granted? Like, because I've heard people, like, there was a boom in, natural gas, like with fracking and everything. And so, we kind of take it for granted now that the U.S. again is, like, the world's leader in, oil and gas production, whereas that wasn't the case, in 1998 or something. You know what I mean? So, I mean, it was a pretty quick thing if you look at certain elements like that. And then I know a lot of people are pointing to AI and, is that doing something, could there have been, or just even in general, I mean, just there's been a lot of innovations right now. Like if you get laid off and you want to get a new job, especially if you're willing to move, there's a lot more at your fingertips now than there would have been 30 years ago. And so I think it is possible that a lot of these innovations are being masked, and that if we had like sound money and sensible interest rates and so forth over the last 40 years, that would be more apparent, and it would be easier to see all those innovations and what they gave to us, whereas it's like those were occurring while the government was swamping us with all this other stuff, and that the two on net largely canceled out, and so it just looks like we're kind of just treading water for 20 years.
Right.
Yeah, and Bob, what do you think of an idea that um, maybe a lot of the government statistics, a lot of statistics that conventional like economists follow, just are like measuring the wrong things or following the wrong things in terms of this is something I've thought about for a while. Just from the manufacturing economy to the service-based economy, I just wonder what are the things that are actually worth looking at to know if things are going well or
there's
not.
different things cut in both ways. So on the one hand, like conventional measures of the consumer price index, I think have understated what people experience. I think just colloquially, like doesn't people when they like according to CPI, the food at home index is only up something like 27% over the last 5 years. I feel like grocery store prices are up more than 27% over the last 5 years, just my own personal recollection. And so I think that they do understate it. And even beyond just like, are they fudging the numbers or are they not adequately accounting for shrinkflation things? There's lots of stuff like when I go into a Walmart now, if I find an employee, like it's like, where's Waldo? And, they phased it over time. Like now it's self-checkout and everything. Whereas before that was a novelty, but there were still 8 registers going with, people working them, and they phased it. So there's lots of ways that the stores are cutting or containing costs, I should say, that technically in a sense is making it more quote expensive to get a gallon of milk. But surely that's not showing up in the official statistics of how much does milk cost now versus 10 years ago. But on the other hand, I saw this survey, I forget when this came out. I think it was like in the late 2000s, where some researcher asked a bunch of college kids, right now, if you could have $1 million payment or never use Facebook again, what would you take? And very few kids took the $1 million. And so the point was there was a sense in which they had this service that they valued, at $1 million in present discounted value. And yet it was, basically free, or, they were giving their personal information in a sense to pay for it and watching ads. So anyway, I'm just saying there's a lot of stuff like that where, like a lot of what we're getting is not coming into the conventional GDP statistics. And yet there is a sense in which, and it's not just frivolous things like, oh, the entertainment I'm getting from Twitter or whatever, but also, like I say, LinkedIn job connections and things like that, or, oh, I want to rent my house out, put it up on Airbnb. It's just a lot easier now for commerce to proceed. So, supply chain management and whatnot, given, just computers in general, but even now, AI and specifically, that I think probably is not showing up in the conventional GDP statistics.
Right. And I guess even kind of the work you're doing now, right, with tokenization of different things.
Right.
How does that show up in an economy? And where
so I guess the way it would show up is like other measures of productivity all of a sudden would start rising. Like, oh, it seems like a given combination of, land and copper and human labor is yielding more output than it did before. But really it's partly because, all the logistical stuff behind the scenes is more efficient now because, the computers are doing, or the blockchain stuff is making the financial transfers. Just another example, like Dan, you were talking about, these foreigners that right now they're relying on dollar denominated assets, and geez, you'd think they'd want to move away from that, but they're sort of locked in. Let's say they wanted to move to a gold backed currency. I think it's difficult, like for a BRICS kind of negotiation, for all the reasons it's hard for, governments to agree on splitting the spoils or whatnot. But this RWA technology, besides having tokens that are claims to life insurance, you can now, there are tokens that are claims to gold bars, in very safe vaults, in Switzerland or something. And so people can trade those things. So I think over time, it's just going to be a lot easier for people to, as finance becomes more decentralized. I think a lot of this stuff right now is going to get easier, and that may cause, certain markets to crash. But I think in general, for, the standard of living of the average human being on planet Earth, yeah, a lot of these innovations are raising the bar, and it's not showing up in the official statistics.
Yeah, I was just saying before, I think we could probably do a, things that don't show up in the official statistics show
Yeah.
someday. It would take a long time to get through all that. But actually, it's time for our final question. And it's been great fun talking with you. It's the same final question for every guest, no matter what the topic, even if it's a non-financial topic, which it occasionally is. If you have already said the answer to the final question, feel free to repeat it. And the final question is simply this: if you could leave our listeners with a single thought today, what would you like that thought to be?
I guess I would tell the listeners that they should, especially if they're on the younger side, besides simply focusing on how do I allocate my portfolio, but to also think, how can I bring in more streams of income? That I think a lot of times people focus so much on preserving what they have instead of thinking, I need to come up with ways to bring in more. And so that's, I guess, the thought I would leave.
Oh, excellent. Right in a nutshell. Focus on more streams of income, not necessarily preservation. That's good. I like that. Thanks. And thanks for being here, Bob. I really enjoyed talking with you.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.